In the complex world of real estate, opportunities constantly emerge and vanish. But for many, the story isn't about the grand successes, but the quiet regret of what could have been. That feeling of watching property values soar, knowing you hesitated just a little too long, is a powerful and often costly lesson. Beyond missed chances, the housing market presents very real pressure. Mortgage stress, with rising interest rates and fluctuating incomes, can turn the dream of homeownership into a relentless financial burden, leaving many feeling trapped and overwhelmed. This uncertainty extends to broader market anxiety. Daily headlines about inflation, recessions, or housing bubbles fuel a constant state of unease. It makes confident decision-making feel like an impossible gamble, paralyzing potential buyers and investors alike. Even for those who manage to enter the market, renovation projects can quickly turn into money pit. What starts as a vision for added value can easily become a property renovation mistake, draining funds and enthusiasm, and leaving investors with less than they bargained for. Ultimately, these challenges coalesce into a pervasive investment uncertainty. The fear of making the wrong move, of losing hard-earned capital, keeps many on the sidelines, preventing them from participating in one of the greatest wealth-building engines available. The most tangible cost of inaction is often the housing appreciation miss. Imagine watching property values climb year after year, knowing that if you had invested just a few years earlier, your equity would have dramatically compounded. This isn't just about statistics. It's about life-changing wealth left on the table. And when mistakes are made, the reality of financial loss analysis can be brutal. Reviewing portfolios marred by poor decisions underscores the critical need for sound strategy and disciplined execution, highlighting where the market extracted its punitive price. Beyond individual properties, entire regional shifts can be overlooked. The relentless march of urban growth missed by early investors means forgoing the exponential returns found in developing neighborhoods, prime transit corridors, or burgeoning city centers. These are areas where intelligent foresight translates directly into significant appreciation. Equally critical is understanding the nuanced world of commercial property vacancy. While residential markets grab headlines, overlooked trends in retail or office spaces can signal both risks and unique opportunities. For those who look closely, a high vacancy rate can be a warning sign, or for the savvy investor, a chance to acquire assets at a discount. At the heart of many costly mistakes lies investor psychology, particularly the pervasive phenomenon of real estate FOMO, fear of missing out. This powerful emotional drive often pushes individuals into rushed decisions, overpaying for properties simply because everyone else seems to be buying, ignoring fundamental market analysis. Another subtle yet dangerous trap is confirmation bias investing. This is where we instinctively seek out information that confirms our existing beliefs, dismissing any data that contradicts our chosen path. It blinds us to red flags and prevents a holistic, objective assessment of an investment's true potential. The dream of owning a perfect home or investment property can easily lead to emotional property buying. Decisions driven by sentimentality, rather than cold, hard numbers, often result in overspending, overlooking critical flaws, or making commitments that strain financial stability down the line. The past, too, can weigh heavily on future choices through investment anchoring bias. We often fixate on an initial price or valuation, even when market conditions have drastically changed. This anchor prevents us from adjusting our expectations and seizing new, more relevant opportunities. Finally, the sunk cost property dilemma can lead investors to throw good money after bad. The reluctance to abandon an underperforming asset simply because a significant amount has already been invested perpetuates losses and prevents reallocation to more profitable ventures. Recognizing these biases is the first step towards mastering rational decision-making. To counteract psychological traps, a data-driven approach is paramount. Understanding comprehensive property market data including pricing trends, inventory levels, and transaction volumes, provides an objective lens through which to view the market, illuminating true value versus perceived value. Crucially, this involves rigorous comparable market analysis, or CMAA. By meticulously examining recently sold, pending, and active properties similar to your target, you gain a clear picture of fair market value, preventing both overpayment and missed opportunity. Beyond property specifics, keen demographic trend analysis is vital. Understanding shifts in population, age, income, and lifestyle can predict future demand for certain property types and locations, guiding you toward areas poised for sustained growth and strong rental yield. And before any commitment, comprehensive property due diligence is non-negotiable. This meticulous process involves legal, financial, and physical inspections, uncovering any hidden liabilities or structural issues that could erode your investment before it even begins to generate returns. It's about looking beneath the surface. Developing a robust property evaluation framework is key to consistent success. This means having a clear checklist and criteria for every potential acquisition, assessing everything from location and condition to income potential and future appreciation, ensuring every decision is aligned with your overarching investment goals. Integral to any framework is a thorough real estate risk assessment. This involves identifying potential pitfalls like natural disaster exposure, economic downturn vulnerabilities, or unexpected maintenance costs. By understanding these risks up front, you can implement mitigation strategies or adjust your investment thesis accordingly. Effective investment planning requires a dedicated approach, often visualized on an investment planning board. This isn't just about spreadsheets. It's about mapping out timelines, capital allocation, target returns, and exit strategies, ensuring every step is purposeful and contributes to your long-term vision. Further enhancing this is investment scenario modeling. What if interest rates rise? What if rents fall? By simulating various market conditions, you can stress test your investments, understand potential outcomes, and prepare for contingencies, turning uncertainty into calculated probabilities. Ultimately, the goal is to build a diversified property portfolio. Spreading your investments across different property types, locations, and asset classes minimizes risk and maximizes stability, creating a resilient foundation for enduring wealth building, rather than putting all your eggs in one basket. Acquisition is just the beginning. A truly successful rental property thrives on tenant satisfaction, consistent cash flow, and meticulous upkeep. It's about creating an asset that not only performs financially, but also provides a desirable living space. This success hinges on effective property management. From vetting tenants and handling repairs to navigating legal obligations, professional management ensures your investment remains profitable and hassle-free, preserving its value and maximizing returns over time. Conversely, a neglected investment property quickly becomes a liability. Deferred maintenance, poor tenant relations, or ignoring market shifts will inevitably lead to declining value, lost rental income, and costly repairs that could have been avoided with proactive care. Looking forward, understanding strategic housing development is crucial. Where are new communities being planned? What infrastructure is being built to support them? These developments indicate future growth corridors and investment hotspots, often driven by shifts in population and economic activity. This often ties into suburban growth investment. As urban centers become denser and more expensive, smart investors are looking to the expanding fringes. Identifying areas with affordable land, good schools, and developing amenities, the magnets for future generations of homeowners and renters. Navigating the financial landscape requires expert guidance. A thorough mortgage consultation can demystify loan products, secure competitive rates, and structure financing that aligns with your long-term investment goals, preventing future financial strain. Partnering with a professional real estate agent is more than just finding listings. It's gaining access to market insights, negotiation expertise, and a network of industry contacts. A great agent acts as your eyes and ears, finding opportunities before they hit the general market. Protecting your investment is paramount, making sound real estate legal advice indispensable. From contracts and title issues to zoning laws and landlord-tenant disputes, legal counsel safeguards your assets and ensures compliance, preventing costly oversights. Perhaps one of the most valuable assets you can acquire is a real estate investment mentor. Learning from experienced investors who have navigated various market cycles can fast-track your learning, provide invaluable wisdom, and help you avoid common pitfalls, transforming your journey into a guided path to success. Staying ahead means understanding economic forecasts, housing market predictions, monitoring macroeconomic indicators like interest rates, employment figures, and GDP growth allows you to anticipate market shifts and position your investments strategically rather than reacting to them. The rise of technology is redefining property. Smart home investment, incorporating energy efficiency, automation, and security, is no longer a luxury, but a growing expectation. Properties equipped with smart tech command higher rents and attract more discerning buyers, future-proofing your asset. Similarly, sustainable property trends are rapidly gaining momentum. Eco-friendly features, green certifications, and resilient design appeal to a growing segment of environmentally conscious consumers and offer long-term cost savings, ultimately enhancing property value and marketability. Perhaps one of the most profound shifts is the remote work housing impact. As more people gain flexibility, demand is shifting away from dense urban centers to more affordable, amenity-rich suburban and rural areas, creating new investment frontiers and opportunities in emerging locales. Ultimately, the journey from uncertainty to success is about becoming a confident real estate investor. It's about leveraging knowledge, mitigating risks, and making informed decisions that align with your financial objectives, rather than being swayed by market noise. This confidence is built on strategic property thinking, approaching every acquisition, every negotiation, and every market shift with a clear, calculated plan, anticipating moves and positioning yourself for optimal outcomes. It's a game of foresight and precision. At Keystone Property Advisors, our mission is to empower you through continuous investment education. We provide the tools, insights, and frameworks you need to not just navigate the market, but to master it, transforming complex data into clear, actionable strategies. This is your opportunity to unlock significant wealth building through property. Stop missing opportunities, stop succumbing to fear, and start making intelligent, confident real estate decisions. Partner with Keystone Property Advisors and build your lasting legacy, brick by successful brick.